Last time, the candles formed small words. A doji, a hammer. But now we step back, far back, and something bigger appears. Zoom out from the individual candles, and the whole chart, over weeks and months, starts to draw recognizable shapes. These are chart patterns, and traders believe they hint at what the crowd is about to do next. Today, you learn to spot the classic ones easily, so the big picture stops looking random. Here is the simplest way to organize them. Every chart pattern falls into one of two families. Reversal patterns, which suggest a trend is about to flip direction, and continuation patterns, which suggest a trend is just pausing before carrying on. Reversal means the road is about to turn. Continuation means it is only a rest stop. Keep those two buckets in mind, and the whole zoo of patterns gets simple. Let's meet the most famous reversal pattern of all, the head and shoulders. Picture 3 bumps in a row. A peak, then a higher peak, then a lower peak. A shoulder, a taller head, another shoulder. When this shape appears at the top of an uptrend, traders read it as a warning that the climb is exhausted and a fall may be coming. There is also an upside-down version at market bottoms, the inverse head and shoulders, which hints the opposite, that a downtrend may be ending and turning up. Next reversal shape, even easier to see, the double top and double bottom. A double top looks like the letter M. The price rushes up to a certain level, fails, falls back, charges up to that same level again, and fails a second time. Twice rejected at the same ceiling, the buyers give up, and the price often turns down. The double bottom is the mirror image, a letter W, where the price tests the same floor twice, holds, and frequently turns back up. 2 failed attempts at the same line is the whole story. Now the other family, continuation patterns, the rest stops. The most common is the triangle. The price swings get smaller and smaller, squeezing into a tightening point like a coiled spring. Buyers and sellers are reaching a temporary truce, energy building, until the price finally bursts out of the triangle, often continuing in the direction it was already heading. And then there's the flag, a sharp move up, then a brief, calm drift sideways, the flag itself, before the original move resumes. A pause to catch its breath, not a turn. Here is the thread tying every one of these together, and it is the same idea from 2 episodes ago. None of these patterns are magic symbols. Each one is just a picture of support and resistance, of buyers and sellers fighting at certain levels, drawn large across the whole chart. A double top is just resistance holding twice. A triangle is just the battle range narrowing. Once you see that, you're not memorizing shapes, you're reading the crowd's behavior at scale. But now the warning, and for chart patterns it is especially important. Your brain is a pattern-finding machine, sometimes too good at its job. The same instinct that makes you see faces in clouds will make you see a perfect head and shoulders in random noise. The name for this is pareidolia, and it has fooled countless traders into seeing signals that were never really there. A pattern you have to squint and tilt your head to find is not a pattern. It is your imagination. So serious chart readers add 2 rules of discipline. First, the pattern must be obvious, not tortured into existence. And second, they wait for confirmation, usually a clear breakout, the price actually punching through the pattern's edge on real volume, before they trust it. A shape alone is a maybe. A shape plus a confirmed breakout is a signal worth respecting. And the honest caveat we never drop. Even a textbook perfect pattern is a probability, not a promise. Remember the efficient market. Millions of traders see the very same head and shoulders at the very same moment. So no shape is a guaranteed money printer. Patterns shift the odds a little at best in the hands of someone disciplined. They're a lens for understanding crowd psychology, not a crystal ball. So look back at that chart that used to seem like pure chaos. Now, when you zoom out, you can see the road signs. The head and shoulders warning of a turn, the M and W of a level tested twice, the coiled triangle, and the resting flag promising the trend will continue. You can read the big picture now, as long as you stay honest about the difference between a real pattern and a hopeful one. I'll see you in the next one, where we figure out when a stock is actually cheap or expensive. Until then, keep it simple and never trade a pattern you had to imagine.